All right, all right. I'm Jay Rod, and I'm here with Zach Scheit in what is, maybe one of the most important months of the year for the stock market.
Hmm.
Zach, how are you, man?
I'm doing well. I'm actually, I was going to wrap up with this, but I'm not discouraged. I'm actually looking forward to what's going to be happening in the market, and I think we're in an exciting spot. But with that said, I do know this has been a painful time for a lot of investors, and it's been a busy time. You and I and our whole team, we've had our heads down looking through all of this data, and it's coming through fast and furious, and there's a lot going on.
Right.
But I am super excited to have this call, and I hope by the time we get off this call, you guys will feel like you have a better understanding of what's going on. You'll have a little more confidence with what's going on in the market and how your investments are working out. And really, we'll just put ourselves in a place where we can protect the wealth that you work so hard to save, and where we're optimistic and excited about the possibility of growing that wealth through the second half of this year. So let's go ahead and we'll start by stating the obvious. The stock market has been extremely weak. I will say that it makes sense that speculative stocks and some of those high flying stocks that we've kind of been warning you about, it makes sense that they've been trading lower. But now, as we look at the market right now, just over the last couple of weeks, even the good stocks are getting hit. And that's frustrating. But I've got some good explanations for why this is happening, and hopefully that kind of explains things a little bit better. We've got a lot to cover, but we'll start by me kind of explaining a little bit about what's going on right now in the market. So the big news is that inflation is continuing to rise, and we got the latest CPI data, and it was pretty hot. Inflation continues to be a big deal in our economy, and it's hurting consumers. It's making it more and more difficult for your savings to actually pay for the things that you need on a day-to-day basis. And so the Fed, in response to this inflation, is in the early stages of hiking their target interest rates. So that's kind of what's going on. And as the Fed hikes interest rates, it naturally pushes stock prices lower, especially the speculative stocks that aren't earning any profit right now, but will earn in the future. Because as we talked about many times, when you have future earnings and interest rates are higher, we as investors should be willing to pay less and less and less for earnings that are going to happen a long time in the future, because we actually could be earning more by putting that money into a savings account or some other interest bearing account when interest rates are higher. But now, why are good stocks trading down? We know why the speculative stocks are trading down, but why are some of the very best stocks trading lower? To answer that, I want to tell you a story. It goes way back. I'm feeling old now. 20 years ago, 2001, early 2001, when I was wet behind the ears, getting my start at the hedge fund. And I remember this was right after the kind of the peak of the dot-com crash. And I was really proud to be working at the fund that I was at, because our fund didn't lose money the same way so many other investors lost money during the dot-com crash. So we weren't patting ourselves on the back, but at the same time, it was pretty good for our investors that we didn't lose their money. But there was a day in January of 2001, Bill, my boss and mentor, came into my office, and he looked really frustrated, and he told me, Zach, we got to sell a bunch of our positions today. So start putting a list together of what stocks we can sell. And I was a little bit confused, because I knew that he was excited about our investments. I knew that we were in a good spot, that we had good, solid companies that we were invested in. And so I asked him, Bill, what's going on? Why are we selling? And he said, well, we've got redemption letters. And to an investment manager, a redemption letter it's a curse word. It's the worst thing that you could possibly get. That's when your investors say, hey, I need some cash, by the end of the month or by the end of the week, or whatever your agreements are. Give me some of the money. I'm pulling money out of my account. So we had to sell our positions to pull money out of the accounts so that we could send it to our investors. Why were our investors asking for money? Well, because they had lost money in lots of other places in the market. And our investors, they were wealthy investors. They needed money for their day-to-day lifestyles, for their country club memberships, for their trips, for whatever it was. And they needed money. Well, where did they decide to pull the money? The best place for them in their mindset was to pull the money from the fund that still had money, because we didn't lose money during the dot-com crisis. So they pulled money out of the area that did the best during this crisis period, because that's where they had the most money. Well, investors are doing the same thing right now. As they need money for for their day-to-day life, or even just they're afraid and they're trying to get more cash in their balance on their balance sheet in their accounts, they're selling the stocks that have held up well. Because why would I sell a stock that's down 80% from its high? Maybe it'll come back, but I will sell this really strong a Home Depot, or I'll sell GM, or some of those other, like some of the bank stocks. Many of the stocks that have basically, they're good, solid companies. The stocks have held up well. And so investors feel like they can actually pull money out of those stocks. So that's a big reason for why these quality stocks are trading lower, kind of here at the end of this bear market trend that we've had. And it doesn't make it any easier for you. I know that if you're holding those positions, it's frustrating to see them trading lower, but I do think that's a really big signal that we're getting close to the end of this bear market, or at least this particular period of selling. And it also gives you an opportunity to buy some of our favorite stocks at a discount. So that's definitely a good thing, even if it does feel a little frustrating right now.
Well, great stuff. I mean, I can't stress this enough how fantastic it is that for almost 3 years now, we've got a former hedge fund manager, portfolio manager, spilling the secrets of really market success. This is great.
Well, it's been an interesting 3 years. We've had a lot of ground to cover. I mean, it really has. This will be a season that they'll be writing textbook, case studies about for many years. So I'm glad that we've been able to walk through it day by day, week by week, month by month, and hopefully really help people grow and protect their wealth.
That's the name of the game, right?
Yep, for sure.
Great. Well, Zach, as always, thank you so much for your time, for your insights. On behalf of Zach Scheit and the Lifetime Income Report Pro, I'm Jay Rod, and we'll see you next month.
See you guys.